the Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, if you watch our videos with any regularity, you'll know that we haven't talked about value stocks in a while. So we're going to do that right now with our value strategist, Tracey Ryniec, who has a couple on her radar.
Yes, I'm back with value.
Yes, that's right. And here's the first one on your radar, a company called On Assignment.
Yes, staffing.
Temporary staffing company.
Yep, these guys have been hot. A lot of the staffing companies have been because, of course, the job market is so strong. This last quarter, they did have a little bit of issue in their permanent hires, a little bit weak there. Not sure what that says about the economy, but the temp side is still going strong. So people are hiring a little cautiously because a lot of times they'll hire on those temps permanent.
Yes.
But they're unsure, so they're hiring the temps. But this isn't necessarily a bad thing for this company because they handle both. They also are big kind of in the creative area. So they have this segment called Creative Circle, which does advertising, marketing, like digital, all the cool areas we all want to work in.
Right.
And that's been really strong. Revenue this last quarter was up 20% in that group. So certain areas doing better than others. But, people got real nervous at the beginning of the year with these stocks. And we saw some big sell-offs. That's why we got the value here. But after these last earnings kind of reassured everybody, estimates are moving higher again. And we're going to see double-digit earnings growth this year, about 19%. That's not, that's pretty good, I would say, in it's allegedly a muddle-through economy. Right. So you can see the estimates rising here, and it's the Zacks number 2 rank buy. But as I said, people were getting nervous. When we had that big sell-off in January and February, these shares got hammered hard. They're up off the lows, still cheap with the forward P of about 12. I still do like this segment here. I think it has a little bit ways to run. Obviously, we're going to get, peak job at some point. I don't think we're quite there yet. And given the sell-off, you're able to get in here at a little bit better position.
Plus, these services offer a great opportunity for companies to identify people with the skills necessary.
That's right.
For the jobs that they have available without having to sift through.
Right. We all know
a ream of resumes.
Yeah, anyone who's hired knows you just get, dozens of people who maybe aren't what you're really looking for. Right. So use of the staffing agencies is really hot right now.
All right, we go from staffing to oil, a company called Frontline. They ship crude oil.
They do. I didn't think I'd be covering these guys for quite some time, and I haven't covered like a Frontline in many, many years. They're a big tanker company. Everyone was worried over the last couple of years that the tankers were overbuilt. Any kind of shipping has been overbuilt, but we're starting to see some stabilization on the crude side, so people are beginning to feel a little bit better. They just reported this week, actually, on May 31st, and they beat big, so that reassured some people. They are profitable. You can see the earnings estimates here starting to inch up. That might go up even further this year based on the fact that we just got this earnings report in, so the analysts are still making some changes. But this is a nice upward trajectory, and that's finally what you want to see. This company also, interestingly, pays the quarterly dividend. Basically,
small dividend.
Well,
right?
It's yielding about 7.5%, actually.
Okay. Because I saw 40 cents a share.
Yeah, which is a big yield, but they're paying out 80% of their adjusted earnings. The rest is actually going into new builds, which is reassuring as well, because if you're overbuilt, you're not going to build new ships because you wouldn't need them.
Right.
But now they're actually investing in building some new ships. That's all a good sign. And as you can see with the chart, total devastation starting off the year. Both crude was down. I guess everyone thought no one would be shipping oil anywhere. It didn't look good. It is up off the lows, and just even this week on this good earnings. Really cheap stock, trading at about 7 times. You get that dividend, which will change every quarter, but right now they are profitable, like I said, and paying out this nice chunk of change to you. So I kind of like these. I like these crude shippers here.
And we got
it's an interesting play.
Got the headline this morning that OPEC apparently is not going to adjust their production targets.
Right.
So
I don't know why
how that's going to impact these
Well,
companies,
at least crude has stabilized at this slightly higher level than what we saw earlier this year, so that helps with supply-demand issues and with these crude shipper guys.
Up ultimately, these guys.
Yeah, everyone in the chain.
Do you own either of them?
I do not.
All right. Check out more stock information, stock picks, stock picking strategies, and commentary on our website, zacks.com. If you're not there already, get on over to the homepage because there is where you can link to it all from. With Tracey, I'm Terry Ruffalo.